Okay, I think we're good. Sweet. If you guys are able to see me and hear me, my screen isn't showing up here, but do me a favor and drop something in the chat. If I'm live and you guys can hear me, you can see me, and we're good. Drop a 1, drop a 2, drop something in the chat to let me know that you guys are able to hear me and see me clearly. And then we'll go ahead and get into this tonight. Okay, let me open up this. Sweet. Perfect. So what is going on, guys? I hope that you're all having an amazing night tonight. It is Monday, and we are going to be going over a general market analysis. We're going to be going over a trade that we pretty much analyzed on Friday after the market had closed, and we were predicting for market open. And we're going to be breaking that trade down, which is what I have on the screen currently. And then aside from that, it's going to be somewhat of a short call. We're going to see what the market's currently doing. What we're expecting it to do possibly tomorrow morning. And if we have the opportunity to, I guess, identify an entry now, then we'll go ahead and do so. But whatever the case may be, feel free to, throughout this call, feel free to ask questions, write your questions down in the chat, press the enter button, and ask for help if you guys are confused about anything that I'm talking about, whether it's beginner stuff, whether it's more advanced stuff. There are some people that are watching this that are not Cashflow students yet, whether you plan to join in the future or if you're just wanting to, I guess, compare styles of trading or whatever the case may be. Feel free to do whatever you want, ask whatever you want, and I'll do my best to answer the question. And if I'm not able to answer the question good at that point, then just say, hey, Ollie, you didn't answer my question good, and I'll do my best to answer the question correctly. So, and then same thing, if you guys get confused, or you want me to, repeat myself or whatever the case may be, it's a smaller call tonight since it's Monday. Usually not that many people get on these at this time. So if, you guys want to take advantage of that, let me know if you guys have a pair that you want me to look at, or something of that nature. I can analyze a different, type of, whether it's commodity or indice or whatever. Some of you guys like to trade that. But I'm going to analyze EU first, Euro USD. I'm going to break that down because that is the pair that I like to trade. And again, we're going to be breaking down a trade that we analyzed on Friday and explaining why that trade was able to win, how we were able to analyze it, and then we're going to be seeing what we can predict or identify for tomorrow's trading session. And if the entry is here tonight, then we'll see about taking the entry tonight. But just looking at it off rip, I'm not really seeing too much of something relevant right now. And as always, if you guys happen to learn something, or if you guys feel as if I was able to help you polish up your trading strategy or become more confident in the market, the best thing that you guys could do for me is take a little picture, post me on Instagram, and shout me out. That way I can help impact more people that are just like you, right? So if you guys could, right, my Instagram is @OllieCashflow, and yeah, shout me out if you guys feel as if I am somebody worth shouting out. And if I'm not, then shout me out and say this dude's a clown and don't sign up with him, pretty much, right? So to get into it, right, so the first thing we're going to do is I'm going to make myself smaller. But yeah, I guess if you're able to do that, that'd mean the world, but not until the call is done and I'm done teaching you guys everything, right? So the first thing we're going to do is break down the trade. And we're going to start off what happened first, and then what we'll do is we'll go ahead and we'll rewind the market, and we'll go over each confirmation as an individual, and then we'll line up everything and show you guys why it was a good entry to take at that point in time. So this is Euro USD. We're going to be looking at the 15-minute time frame primarily, and the trade that we're looking at is right here, right? So if we go and we look at the bottom of the screen, you guys can see that little like the timestamp or whatever, right? So we called this trade out on Friday afternoon, right? The market closes Friday afternoon, so this was after the market closed. I got on a Zoom call with another student, and then I was helping him with with helping him polish up his strategy and identifying his entries. So then the best thing that we could do is always do it live, right? So whenever we were on that call, we analyzed this pair together. Completely blank screen, and then what we ended up, I don't like using the word predicting. I got to think of a better word. I guess anticipating. What we anticipated was going to happen was that there's going to be a bullish reaction come market open, right? So again, this was Friday afternoon when we marked up this order, I guess, for lack of better words. And then literally as soon as Sunday opened, because the market opens up on Sunday, so we'll go right here. The first candle that happened, we came right back to our entry, but then after that, it literally went straight to take profit. It didn't even give a chance to consolidate or counter trend or anything. So the entry went a lot better than I thought it was going to go. I knew I had expected it to go in that direction generally, but it was kind of cool to see that, okay, wow, it happened, as soon as market opened, so that was kind of cool to see, right? And then as of Sunday, day, afternoon, and night, right, we came up all the way to 5250, which, as we all already know, based off of my style of trading, that is a quarter level zone, right? That is a psychological zone, right? So just as perfectly as we always say it happens, the market broke through this zone that we were at. Look at where it bounced off of, right? First thing we'll look at right here is this whole number zone. Let me move my this here, right? Look at where this area bounced off of, right? If we go over here, 4,500, right? So yeah, 4,500. So if it's 4,500, that's another whole number zone. So the market bounced off of that number perfectly, right? As soon as it touched it, it started going up, right? And then it broke through every other zone straight through until another quarter level, right? So it broke through the 5,000 zone, which was a previous resistance level, and that's where our take profit was. But it exploded through that, and then it stopped, though, completely ended all of its momentum right at 5250, right? So that, again, further gives us further confirmation and further confidence in the strategy and in the system that we use on a day-to-day basis, right? Without making things complicated, without overthinking anything. To summarize this entire trade in, a couple of words for you guys, we're still going to go in depth into everything, but the easiest and fastest way to help you guys identify what happened and why is that price action and price in general moved from zone to zone. It moved from a whole number psychological zone with a bullish impulse to another psychological zone. Where do you enter at the psychological zone? Where would you put your take profit before you know where it's going to go? You would just put it at the next psych zone. And in this case, it was 5,000 for me. I didn't think it was going to break through that fast or that aggressively, but it did. And then it ended up going all the way to the next 25 pips, which, I think that's 25 pips. Yeah, 25 pips. And then that's where it ended up making a U-turn. So now at this current point in time, the pair came back down, and then where does Monday start? Monday starts here. So all of this was Monday's movement. So from like right here, and then Tuesday, or not Tuesday, hasn't happened yet. And then where did New York end? New York ended like right around here. So all of this stuff is what happened throughout today. And what we're going to analyze now is what's probably going to happen through Tokyo session, which is what we're currently walking into, and also possibly London. And that will help us identify where the market is probably going to travel towards tomorrow, right? Something that is, I like to start off my morning analysis with is identifying, and this is a very common thing that, a lot of traders do, which is identifying the previous session's high and low, right? Or highs and lows, I guess, is high or low, or highs and lows, whatever it is. But the highs and lows of the session. So for this example, if we were entering this trade here, right, at, let's go look at the previous, how would I explain this correctly? So, because this is on a weekend, so it's a little bit different. But it's the general concept, right? Like, let's say during this New York session, this was New York high, and this was New York low, which technically kind of was. When the market reopens the next trading cycle or the next trading day, price is probably going to target both of them. Either take out the low and then move to the high, or take out the high and then move to the low. In this scenario, kind of what happened, it didn't take out the low technically because the low is way down here, but it did move out and it took out the high. right? And so the high, again, would be around here, and that's where, again, similar to where our price target was, right? So that's just clearing up, I guess, a general, just quick thing to look at whenever you're analyzing the market is where is price at now and what was the previous high or low of the previous session. And for my example, usually when I'm trading, I trade New York session. So I'm kind of looking what was London's high and what was London's low. You know what I'm saying? So, and we'll get into it for this example in a minute, and I'll show you guys what I mean by that more specifically. But now what we'll do is we're going to put the replay bar on, and we're going to go back to Friday afternoon where we analyze this live, right? And we're going to see what we did, how we were able to find it, and we'll see what you guys are, and I'll show you guys how you guys can find it as well, right? So let's say you're looking at a raw chart just like this, right? I probably could delete everything if I wanted to. I don't think I need these other trades. Whatever, I'll delete it. It doesn't matter. Delete 50 drawings. Okay. Alright, so we're gonna start from a clean slate for you guys, right? So let's just say you're brand new to trading. You get, or not even brand new, but you're brand new for your trading day, and you're getting on the computer. You're about to analyze the market, and you're saying, okay, well, I'm about to make some money today. Let's go do it. How are we gonna learn how are we gonna make some money today on the charts? Okay. You wake up, you get on. This is, again, Friday afternoon, okay? So it doesn't really matter, but I'm just giving you guys the context, right? But what we're expecting is that the next trading day, this is what's going to happen, okay? So we're anticipating what's going to happen the following week, which is this week. But it's the same thing as every other day. The strategy is the exact same, okay? So the first thing that we're going to start with is identifying our zones, right? We're going to identify what some people like to call supply and demand. We're going to identify what some people like to call support and resistance, or, liquidity zones, areas of interest, whatever definition and word you want to call it, right? We're just going to give a rough outline as to where price could likely head to, okay? And then I'm going to show you guys how to polish it up and make it slightly more accurate. That way you're not getting stopped out by a couple of pips before the market does actually end up going in your favor. And also this is going to help you guys not take premature entries, and in the end, which will help you guys save money, right? Instead of losing money because you marked your chart up the wrong way, okay? So for those of you guys that are still new to technical analysis or are still struggling when it comes to making your analysis in general, just pay attention. And then again, like I said, if I go too fast or whatever the case may be, or you're confused or whatever, just type your question in the chat and I will answer the question for you. Okay, so first thing that we're going to do is mark up our areas, right? So easiest way to do it, you take the line tool, right? And you're just going to you're just going to use the crosshair and just put the line somewhere where it looks like there's a support or a resistance level, right? We're going to start off just by putting it very, bland where you can see it, right? There's one there. Obviously, we can see one here. Obviously, there's a little, like if we're seeing this zone right here, you can see there's a resistance, a support, a resistance here. So let's just put it right around there in the middle, right? That's also where we're currently at right now. So it kind of makes a little bit of sense, right? So we'll start off with that. Is anything else really worth marking up at this current moment in time? Could we go back onto higher time frames? Could we go back onto lower time frames and identify other areas of support and resistance? Yes, we could, right? But at this current point, it's not necessary. We're just going to identify raw price action where we at right now. And the second thing we're going to do is we're going to clean it up a little bit. Okay, another way you clean this up now that you have a raw outline, is the way that I like to do it, and what makes the most sense for me, right, is identifying something known as psychological zones, right? Psychological zones, whole number zones, psychological number zones, whatever it is, right? This is what I talk about every single call that I do with you guys. Okay, so that's what you go to now. Now that you have your support and your resistance, now you go to identifying the psych zones, right? Psych zones is the easiest way to remember the term. So if you ever hear me saying the word psych zone, it means a whole number zone. What is a whole number zone, right? It is a number that is whole, right? It's a whole consistent number, right? An example of a whole number zone is 1.05,000, right? Why is that a whole number zone? Because it has a lot of zeros. Okay, so the easiest way to remember it is if the price has a lot of zeros, it's probably a whole number zone, right? And what is not a whole number zone was 1.03752, right? Why is that not a whole number zone? Because it didn't have any zeros in it. Okay, so 4,000, 5,000. If you're trading on more of a smaller time frame and you're scalping, like a 5-minute time frame, the 500 zone, the 100s, those are all little whole numbers. And then in between these whole numbers, right, there's quarter numbers, right? And that's where, and I'm going to show you guys this example in a minute, but that's where it will be instead of 1.5,000, it would be like 1.5250, right? You add 25% because it's a quarter, right? A quarter level, right? And now quarter levels don't have as much importance, or I think that's the right word, right? But as much relevancy as the whole numbers, right? The whole numbers are the very prominent ones, but the whole numbers can be broken into quarter levels, okay? So for this example, now we'll start from top to bottom. What is this first line at, right? This first line, we just put it on there. Why? Because it looks like a resistance level. Okay, but now if we look at the price, what price is that? 1.05048. Okay, that is very, very close. Matter of fact, it's only 4 pips away from 1.5,000. So 1.5,000 now is an area of interest, right? There's liquidity up there. It's a strong price. Why does price react off of whole number zones? Because, again, it's just human nature, and it's easy to remember, right? So investors and banks, they're saying, instead of eyeing down a specific price, they'll just say, okay, let's pump the market up to 1.5,000 and we'll call it there. As soon as price hits 1.5, you see how easy it is to say, as soon as price hits 1.5, we'll sell our orders. Instead of saying 1.0, 2, 3, 4, 5, 6, 7, 8, that just makes it more complicated. So instead, the psych zone is pretty much the same price that they're targeting, but it's rounded in whatever way that you want to remember that as, right? But so it's the closer number, and then the way that you make it even better is you take it, you add up a couple pips, 5 pips maybe if you want to go 5, you go 5 pips below, and now you have a resistance zone, right? Or now, let's go to the other one down here. What is this number, right? 1.4049. Look how the price just perfectly went to that, right? That's pretty close to 1.4,000. Another whole number zone, right? Another major whole number zone. Okay, so now that we have that there, what do? Let's draw another zone right here. Let's go a little bit above, like 5 pips or so, and 5 pips below it. Now we have a perfect zone, right? The market is currently trending in between, right? But that's a lot of pips in between, right? Obviously we can't just look at that, right? That's 100 pips in between. So what's in between that right now? Where is this line at? This line is at 1.04587, okay? If we move that 87 and we round it down to the next whole number, that's 4,500. That's a quarter level, right? Even though it's not 250, it's 250 times 2, right? Which is very simple math, right? Very, very simple math, right? It's just going to 50 now, right? So it's 0, 25, 50, 75, back to 0. You know what I'm saying? So at that point, this is 4,500 in the middle. That is where price currently is floating in between. Now, the only one that we would need, if you wanted to, you could put one right here in the middle, which would be 750. Right? And if you wanted to, you could put one down here for 250. Not super necessary, but you could. Okay? Now that we have our basic, pretty accurate support and resistance levels down, let's drop down to a 15-minute. Right? 15-minute time frame gives us a better view of what's going on, and it gives us a more general idea of what we can expect to happen, in my opinion. Right? Because we're not I'm not a swing trader, right? I'm not an intraday trader. I'm not a major scalper, but I'm in my trades for a couple hours, right? Max. So I'm not needing to look at anything higher than the 1 hour max, but most of the analysis is done on the 15 minute. Okay, so now that we drop down to the 15 minute, and I take so long to explain this because I just want you guys to be able to learn how to do it yourself, right? This whole process takes typically, 5 to 10 minutes, literally, whenever you're doing it fast, But this is what else we went over on the call, so I'm just wanting to make sure you guys get the opportunity to hear it as well, right? So we have this trend line here, just helping us identify momentum to a certain point. Okay, and now the major thing that we're going to go for now is we have this counter trend line, right? And we can see that we broke above this trend. And we broke above that trend with momentum and with power, for lack of better words, right? And we had something that was known as an impulsive movement, right? And that impulsive movement up broke through previous market structure right here, right? Since it broke through previous market structure, we formed something known as a new high, right? Which caused a reversal to happen in this market, technically, right? So now that we had a reversal of this market, we had a break in the structure, and we had an impulsive move. Those are all great signs to have an additional tool that you can use known as the Fibonacci retracement, right? So now what you would do is you would take your Fibonacci from this low point in the market, and you would draw it up to here, to the high point in the market, right? And I have a whole video inside of the actual Cashflow course, and I probably might end up one day making the video for this on YouTube, more broken down into how to use fibs, but you use it how I'm showing you, but the video goes more in depth. So if you're a student, then make sure you watch that. But point being is you draw the fibs from low to high, and now you have an area where the price is probably going to go to where it will react, okay? So at this point, what happens is whenever, where's my little drawing? So with the way that fibs work is when you come to this high point, the market is either going to come down to this orange zone. If you look at the orange numbers, it's either going to come down to this orange zone and then go up. It's going to come down to this gold zone and then go up. Or there's an area right in between here that it might go down to and then go up. That is what the fib retracement tool is known for, okay? So the way that the one that works the most accurate and the one that is the most likely to happen and the one that will usually get the most reaction is the gold zone, okay? So the gold zone is your ideal entry. It's the sniper entry that you guys all want to look for. The gold zone is the place that you're going to get the most confident trade setups and where the trade setups are most likely to go in your favor, right? Not that the fib always works, but if you look at my previous videos and honestly, I mean, I would say this confidently. It's probably one of the best tools that you can use for trading to make your trading the easiest fucking thing in the world. At that point, you still have to learn how to identify the other things that I just mentioned, like the sight zones and everything else. But when you start identifying these other things, the fib just makes everything you just get so much more confident in it, right? Because yes, now we're bouncing off of this whole number zone, but even more important, not more important, but even just as good is we also just so happen to be in the perfect position of our gold zone, right? If we zoom in a little bit closer, where did the market go exactly before it reversed? It hit our sight zone and it hit our gold zone, right? When we hit those areas, what happened? We got a lot of wick rejection. For those of you guys that know anything about candles, right? We had a lot of wick rejection right here, meaning that that's a strong price. That yes, we're in a downtrend technically right now, but price is reacting strongly to this area, okay? So this area likely has a lot of buying orders because what's the opposite of selling? If selling is pushing the market down and the market is starting to want to go up, The opposite of selling is buying, meaning there's a lot of buy orders going on right here. Okay, meaning what? Meaning that if you follow the money, you can make some money too, right? So what we ended up assuming was going to happen was that, oh, okay, because we broke through previous downtrend, okay, because we had this very bullish environment happening here, because we retraced to this whole number zone, we had a break, retest. Where did we retest at? A whole number gold zone, okay? On top of that, right now, let's add on some other stuff that'll make us more confident in this buy, right? Let's look now. Let's use our handy dandy indicators to our advantage, okay? Let's take a vertical line, and we're going to put the market right here, okay? Or the thing right there, okay? So for those of you guys that know how to use these tools, right? If you don't know how to use them, watch the videos that I put out already for them, and you'll learn how to use them, okay? But I'm going to show you guys a general quick thing right now, okay? The main thing that we use the stochastic and the RSI for is to identify something known as divergence, okay? Divergence, to sum it up, okay? Divergence is this, where imagine that the market, the candles that are on the screen, right, are going down, okay? But your stochastic and your RSI are pointing up. That is known as divergence, right? The opposite example is, let's say that the market is going up, but the stochastic is going down, or the RSI is going down. That is known as divergence, okay? So what divergence means is that if the candles are going down, but the oscillators are going up, usually it means that there is going to be a reversal, and that the market is going to start going up, okay? And now same thing, if the market is going up already, but the oscillators are pointing down, that usually means that the market is going to reverse and start going down, right? And it's going to follow what the RSI and the stochastic are saying. Not that the stochastic and the RSI are predicting what's going to happen, but what those tools show you is where is the money going, right? Where is the liquidity building up? So if it's pointing up, but the market is going down, and you're starting to see wick rejections, and you're starting to see that you're at a strong support zone, that gives you more sign and more confirmation that the market's probably about to go back up, right? So at that point, that's another confirmation. We have divergence on both of our oscillators, and that's two additional confirmations. Now I'll show you guys a more clear view of what I mean by divergence. Okay, so if we look here, you see how this is down? The market's generally going up, down, and it's heading in a downwards direction, right? Look here. This is going up while this is going down. This is going up while this is going down. Okay, so that's divergence. It says I have someone said something in the chat. Could I apply this to scalping? 100,000% you can, bro. If you're referring to binary trading, the principles are still there. It's just it's a little bit trickier just because of how often it happens. So that's where the other half of what I was gonna say would be a little bit more, not more applicable, but it would help a little bit more, I would say, kind of, technically. Hold on, I'll show you. Oops, damn, I didn't mean to do that. No, oh, there it is, okay. Okay, so the other part of the indicator tool is this, right? We're already pointing up, we already have the extension on the RSI, which is what you need for confidence to take that buy entry. And we also have the stochastic crossover, where basically the white line went over the gray line and it extended over back into the buy zone. That would be your confirmation to buy in that sense. On a scalp, so by scalping, that's again if you're meaning binary trading. But this, scalping is what I do pretty much every day when it comes to regular Forex. But yeah, so we have that. We have the stochastic. We have the RSI. Now we'll hide those, and let's see what else we have. Right? Aside from that, what other tools can we use, Ollie? We have more indicators, right? But indicators are bad, bro. No, indicators are a way to help you understand what's happening in the market easier, right? So here on the 15-minute, well, how is this a confirmation? Oh, yeah. So the way that we use this on as a confirmation was on the hour and also on the 15-minute. What we had said was that since, here, I'll show you, it's easier on the 15-minute. Since the bands were getting a lot closer together here, it's that same analogy that we use where it's the closer the bands are, the tighter the momentum is getting. And the tighter the momentum, the bigger the move is going to be, right? So the fact that, again, these bands were getting tighter and we were trading at this strong price zone, this strong demand zone or support zone or liquidity zone, whatever, the fact that we were trading at that zone and the bands are getting that much tighter shows us more confirmation that a big move is about to happen. And then if we go to these other ones, this one says same thing, that we're hitting a strong demand zone on the 15-minute and on the hour. The next major zone is the supply zone, which is also where we were targeting for the take profit, which I'll show you guys the actual entry when we're done with the confirmations. But first, we're just getting the confirmations. But here we have the liquidity. The next major liquidity area is the supply zone up here. And then aside from that, the last one would be this confirmation here, which is, and this tool is actually really good. This is a free indicator that you guys can use. I've never tried it for binary trading, but I know it's very effective for regular Forex trading. It's just called Smart Money Concepts by Lux Algo, and it saves you a lot of time when it comes to identifying, because I like Smart Money Concepts too. I just don't, preach it, and I don't want to waste my time marking it up on a daily basis, because everything else that I mark up, excuse me, but everything else that I mark up is pretty much in conjunction with that already. But having this additional confirmation is always good to help you become more comfortable and confident in the trade. So what we have here is that it says on the hourly time frame, we have a week high, okay? Meaning that this is just the beginning of the trend, and that we're probably going to make a newer high above this one, okay? Meaning that the market is going to go up, meaning that we can buy, right? So everything that we've just been discussing over this call has just been to give us confirmation that we have the opportunity to buy in the market right now, okay? So now the hardest part typically is learning where to identify your entries, okay? So the way we did that at this point, since the market was already closed and we were anticipating what was going to happen, since we had already bounced off of the gold zone and we had already taken off a little bit, right? The next best thing to do is just get in now. So we had just put the entry at that point, and then you typically just make it a 3-to-1 risk-reward ratio. So let's say, if we're wanting to target up here, we'll put the take profit at the white line. And we'll make that a 3-to-1 right there. So we'll put the thing right there. We'll target the actual whole number zone instead to make that a little bit better. And then you always need to make sure it's a 3-to-1. So if I have it way out here, that's a 2-to-1. It's not worth the risk, right? So we'll make this a 3-to-1 trade. Right there is good. We're gonna, let's say we have a 13 pip stop loss. For this example, we're going to be targeting 40 pips, okay? Why are we targeting this as our take profit zone? The reason why is because this is where it was previous resistance, okay? This is where the previous highs were. This is where, as well as take profit 1, 2, and 3 are using the fib sequence. This is where the next major whole number zone is, and that is probably where price is going to head to come market open, right? So that was pretty much all the confirmations that we had for the trade itself. We had the fib, We had the gold zone on the fib. We had the whole number. We had the divergence on the stochastic and the RSI. We had the actual extensions on the stochastic and the RSI. We had a weak high on a higher time frame, and as well if you wanted to use currency strength or whatever else. But at the very minimum, we're already at 5 confirmations, meaning this trade is fully safe to take. And that if you lose the trade, it doesn't mean you're a bad trader. It just means the trade was wrong. But if you win the trade, it means that you analyzed it good and also that the strategy works, right? So as soon as we called that out, okay, we just waited. And then as soon as the market opened on Sunday, let's just see what happens, right? As soon as market opens, it goes straight and it hits the take profit level. And then it went even past that, right? But point being is that it hit our take profit level the same day, the same in a few minutes, because this is on the 5-minute time frame. So what time was this at? Or how long was it? An hour and 55 minutes. So in 2 hours, it hit take profit, right? Not even 1 pip of drawdown. Not 1 single pip of drawdown. And then it go negative 1 single pip at all. Okay. But you can do this every single day, right? Even though it was the market closed or whatever, it's the same exact thing. So now what we're going to do now that we analyze that trade is we're going to go and see what we can analyze for the market tonight. It's a little bit different because I like to trade what's about to happen for New York. I wouldn't necessarily call a trade out like for now because, you know, we're in the middle of markets right now, but we'll see what we can find and we'll go from there. But point being is that the main structure that I like to use for trading is identifying psych zones and then identifying the fib for that time frame, identifying trend for that time frame, which I like to use the 15-minute, and then just using my other additional tools to help me become more confident in the direction of the market. All I do is I'm predicting the direction of it, and I'm getting as many confirmations as I can to see how far, or to make sure I'm confident in it, in that direction. And then the amount of confirmations will help me dictate how far I think it's going to go. And when I dictate how far I think it's going to go, that helps me dictate my take profit level and my stop loss level. If I think it's going to go 70 pips, I'll maybe put a 25 pip stop loss. If I think it's only going to go 30 pips, I'm only going to put a 10 pip stop loss, so on and so forth, right? But at the bare minimum, you always need to have at least a 3-to-1 risk to reward ratio, or it's not worth trading. Okay, so that is that setup. So I hope that everything made sense. I know that I was talking kind of fast there, but I was wanting to get through it so we can get to current market. So if anything I said didn't make sense, then you guys can feel free to ask that in the chats. Okay, so let's see what we can find for tonight. And then we'll go ahead and we'll call it a night. I'm tired. So what we'll do for now is how do I feel about AUD and JPY pairs at the moment? I trade Australia and US sometimes if the opportunity is there, but I don't like trading yen because of how expensive it is, and even Australian is expensive too. I think it's like 33-to-1 for 33-to-1 leverage for that. So it is kind of more expensive to trade that still too. And honestly, since I trade regulated, I really only trade Euro US. If again for Forex, not for binary. For binary, it depends on which pair is paying out the most. But for regular Forex, I since I trade on real brokers and I don't trade on unregulated brokers, the only benefit is trading Euro US. That's the best pair you could trade. The only other pair that you could trade or should, it would be USD franc, against the franc, USD CHF, because that pair pays you a lot more. So you can make more money trading that pair. So there's that. First thing I would do on this pair, or on this time frame, let's do this. Because we still have the macro time frame where this fib could just go back up slowly. But let's say that it doesn't right now. Let's just do this. Move that out of the way. There's two ways we can look at this, right? So we're floating right in between our zones. I guess I wouldn't want to mark it, but we're at a support level right now that we've touched a few times. It can either be like there's a fib like this, and it looks like we hit our gold zone pretty decent almost, and now we're going back down. It could be that. Or we could draw a fib here. And then we're bouncing off of the zone that's in between there, but that seems a little unlikely. So that's pointing down. That's 5 minutes. That's pointing down. Right there in the middle. Sorry guys, we're just seeing what we can see here. We still have weak high. Overall, I'm still bullish on the pair itself. I think the dollar has been a little bit overpriced as of lately. We have divergence here too. Here's another good example of that. So this could be the exact same setup that we already took. You know, market's going down. This is going up, technically. And then maybe this little fib is good. We can maybe trust that little bullish fib here. Where it was here. Depending on where the market reacts tonight moving into Tokyo, I think maybe if we were to break, let's just put this here, and we'll go look back on this next week. And I'll post this in the Discord, obviously, as well. But we'll make this a 3-to-1. So we'll target 34 pips at the minimum. So what we're going to wait for is a further confirmation. Either one, we're going to wait for it to break into this zone where we'll enter, or we'll wait for it to break out of the gold zone and then we'll enter. But either way, we're going to want to see it go up a little bit farther, give everything else a little bit more room to breathe, and then once we see that happen, then it could be a good entry. So I'm still bullish on the pair itself. It's just a matter of right now, it's a little bit tricky just considering the session we're in. The dollar has no liquidity, neither euro or dollar has any liquidity in it right now because of the time, right? The euro market is closed right now and the US market is closed right now. So there's no money being in that market, right? Pairs that will be moving tonight will be Japanese pairs. So, you know, at the end, taking that into consideration, there's probably not going to be much momentum, but we'll probably have enough movement to give us to where an entry would be appropriate. And depending on that, maybe during London, maybe I'll get up during London and see where the market's at. If the market is in a good position, then we can maybe consider entering that. And if we do, I'll send that in the Discord. But right now, just based off of what we're seeing, it looks like the same setup that happened here, right? The same setup we just went over looks like it could be happening again. We're a little bit low on the fib, which I'm not the biggest fan of, but we're right here in the middle, which is the 78 zone. So it's not too far off yet. You know, if we continue down, then we'll reconsider and we'll consider selling depending on how price is reacting to that 4,500 zone. Overall, I'm bullish on the pair. So this is what I got for you guys right now. I would say that this is good buy opportunities, and just not at this exact current moment. I'd wait to see what happens during Tokyo and either trade it during London or trade it during New York session. And either way, I will give you guys the updates for that whenever those times come. But that's what I got. So pretty much I'm buying is what I'm getting at. So given that, that is my analysis for this pair for tonight. You know, pretty much. Does anybody have any questions, comments, concerns? I know that I'm not giving you guys like an exact price, but again, because for this session, I don't really think this is the best pair to be trading during this time. But it's a perfect pre-setup for London session or New York session, which is where majority of the money is made in Forex anyways. So that's what I got. But, you know, does anybody have any confusions, any questions about the trade setup, or are you guys just ready to see how it turns out next week? Let me know in the chat, guys. How do you guys feel about it? Does everything make sense for the people that are still watching? Let me get a 777 in the chat if you're watching this and everything I said made sense. And then I can end this call happily, knowing that I didn't just blab. Or if you're confused, then you can say you're confused. That's something I gotta work on, guys. So, I mean, I guess that'll just come with consistency, but how to get a more engaged community. Granted, there's only like 10 people on here, or like 5 people on here right now. But when we get the numbers, you know, I'm gonna need you guys are the original members here, man. I'm gonna need you guys to help me out with the chats. You know what I mean? Because if no one else is talking in the chats, then I'm just gonna be talking to myself. You know what I mean? My job is to help you guys. I already know how to trade. You know what I'm saying? So at that point, if you're here to learn how to trade, then, you know, let me know that you're learning, or not say, hey, Ollie, bro, you suck at fucking teaching. You know, that way I can at least try and do a better job. But shout out to the people that did say something, right? I appreciate you guys. And even if you didn't say something, I appreciate you guys for hopping on and learning here too. I'm just giving you a hard time, right? But this is the year that we're going to stay more consistent with the live streams. The only reason I didn't do it the last 2 weeks is because I was on vacation enjoying my birthday, right? And living life, you know what I mean? The fruits of my labor. So I had a great time. We're back here locked and loaded though. And we're going to be live again on Thursday night. Thursday night at 7:30, at 8 o'clock again. We're going to be going over the updates of this trade, win, lose, or draw. We're going to go over the market, and I'm going to be showing you guys why we won or lost that trade. And I'm going to be showing you guys how you can win the trades as well, or stop losing the trades, right? So there's that. March 12th, I'm going to be in Fort Lauderdale. I'm working on maybe getting a speaking gig there, but they haven't gotten back to me about speaking yet. But I am going to be at an event attending where multiple entrepreneurs that I look up to are going to be speaking at. And if you're local in Florida, you know, or even if you're out of state, you know, consider going down to the event. I can get you guys cheap tickets because your boy's considered a creator. You know what I'm saying? So I can get you guys some free tickets to that. It's called the Aspire Tour. Gary Vee's going to be there. David Meltzer is going to be there. Cody Sanchez, a bunch of other entrepreneurs. It's not so much a trading event, but it's still a good business and networking event where you can meet other like-minded individuals and learn from people that have already made the money you're wanting to make, right? So, you know, that's what we're here for, is to learn how to make money at the end of the day. Okay, so if you can learn a way to help you make extra money to fund your trading career, why wouldn't you want to go there? You know what I'm saying? So let me know. I can get you guys cheap tickets for that. Any other updates that I'm missing out on? I don't believe so. Yeah, so we're going to be live Thursday night. If you guys have questions about the charts, about business, about, you know, whatever, you know, feel free to text me, call me, message me in the Discord, or whatever the case may be. And I'll make sure that I give you the help that you're needing to get, right? That way you can start your trading career successfully. And if you guys have been in Cashflow for a while, or you're new to Cashflow or whatever, make sure that this week you're trading, right? The biggest reason why traders don't make money is not because they don't know how to trade. It's because they're not actually trading. So make sure that you're analyzing the market tomorrow morning or tonight, and that you're pressing the buy or you're pressing the sell button. and you're entering your trades, right? That way you can win or lose. And when you win, you'll know what to keep doing. And when you lose, you'll know what to stop doing. And that is how you make money in trading, guys. Trial and error, okay? So you need to try. That way you can stop having errors. You know what I'm saying? So with that, guys, I'm going to go ahead and close this live stream off. I appreciate you guys for sticking through. And thank you so much, Steven. It means the world, man. And we're going to continue to impact and educate and enrich, my brother. And you're going to be here for the journey, man. So I appreciate you guys. If you need any help, you guys know where to find me. And with that, I will see you all at the top because the bottom is way too crowded. God bless. Have an amazing night. And I will see you guys in the markets. Peace.